What is going on, everybody? Today we are going over CRM Stock, Salesforce. We're gonna find a couple of things. Number one, we're gonna find the fair value of the stock according to the book The Intelligent Investor, written by Benjamin Graham, which is Mr. Warren Buffett mentor. Number two, we're gonna find the price that Warren Buffett will be a buyer, even though he is already a buyer of CRM Salesforce, which is a software company. That's my key here. Mr. Warren Buffett usually buy not software companies, and he bought CRM. Why? I do not know why, but I will find out in the third thing, which is reading over CRM financials. We're gonna go over the financials just like Mr. Warren Buffett on a very simple and easy beginner to understand way, so we can understand why Mr. Warren Buffett bought. They just got Slack like 2-3 weeks ago, and the share just plummeted from like 280 to 220, something like that, 20% below from 2 weeks ago. We will see if it's a buying opportunity, and we're starting right now. Let's go, everybody. Yeah, I'm in Yahoo Finance. There's a couple of things that I need to find out for Salesforce.com CRM. First, we're gonna look at the glance what's going on here. 52-week range. We got a price of 115, which is an awesome price, to 284, which I assume was like 2 weeks ago. If you look at the graph on the monthly graph, we were at 260, then dropped to 220. When was the December 2nd? Like 2 weeks ago when they bought Slack. And that's maybe a buying opportunity. We're gonna find out if 218 is a good price to buy. According to Yahoo Finance Analyst, look at this. Price is overvalued. Not a lot of upside here. 1 year target 275. There's like wherever they were, like 25% upside from here. PE ratio of 56. That's not bad compared to 1100 Tesla or like 400 Zoom. Not bad at all. Market cap of 200 billion. Can this be a 5-bagger and become one of the trillion dollar group, 1 trillion club? Let's get started with the stuff that I need to put in the formula to find the fair value according to Warren Buffett. Number one, I need this one, EPS TTM, earning per share trailing 12 months, which is 386. That's number one. Number two, we're going to the analysis tab, and we're gonna scroll down, okay, to this one, next 5 years per annual. Next 5 years per annual, we got a number of 14%. Last 5 years they grew by 45% a year, which is pretty awesome. I'm in the Excel, how to value a stock like Mr. Warren Buffett does. Super simple. You can get a copy of this Excel in the description below if you join Patreon for the basic $10 a month level. I posted a link to my members about a month or so ago. You can read the Intelligent Investor book or save yourself so much time. Just put in some numbers, just like I show you right now, and you will get the fair value of any stock that you want to own or already own, as long as it is EPS profitable. Two major keys: as long as the EPS is a positive and the growth is a positive. As long as you got those two covered, which are profitable companies, you will be able to get the fair value. All the other ones, IPO, Palantir, Neo, all the stuff that just did IPO lately, those will be needed to be used by a discount cash flow formula, which I'm working to make it super simple and will be added to Patreon as well. Link in the description. Let's move on. So I put EPS 3.86 and growth I put 1404, and the next thing I need to find is the AAA bond yield. Price today is 218. I'm going back to Yahoo Finance to go over the financial statements before I find the bond yield and read financials of CRM just like Mr. Warren Buffett to understand why he actually bought CRM stocks. Okay, so I'm back in Yahoo Finance. We're going over here, financial tab, Salesforce Finance. We got a couple of things. I'm going to go over the financials just like Mr. Warren Buffett. Understand this. This isn't Wall Street, and even Wall Street analyst. This is not a scary stuff. All you have to do is find a couple of ratios. If those ratios checked out, you move to the second column, third column, and so on and so forth, and that is it. Sure, you can read each and every column in here, whatever that you want to do. That's on you. If you think about buying a stock and hold it for forever, I suggest do that. But if you just want a glance to see if a company is growing, if a company is healthy, just do what Warren Buffett does before he actually buys the whole company. So let's get started. Number one on our list, income statement. Here we go. Inside the income statement, I'm looking for a couple of things. Number one, have a glance. Total revenue, the first item. Just have a glance that it's growing. That's important to see that the revenue of the company grows. So we got ourselves 2017, 8 billion. 2018, 10 billion. 2019, 13 billion, another 3 billion. 2020, 17 billion, another 4 billion. And the last 12 months, trailing 12 months, 20 billion. They got themselves into 3 billion more, which is good. Growing a year by year by year, consistent. 3-4 billion a year. That's good. That's good. It's not like they jump 5 billion, went down the next year, and so on. So every year, predictability is good. Predictability is and there's why Mr. Buffett actually bought them. We will find out the ratios, but yeah, it's a good company. We shall see if it's a good product. What I'm looking for here, first ratio is this one. Gross profit, 15 billion. First, see that it grows, went from 6 to 7 to 9 to almost 13 to 15. So the gross profit is good. They're making revenue 20 billion. The gross from that, after they pay a couple of stuff, is 15. After they pay for the products, let's repeat. Total revenue minus gross is just the product minus the cost of the product. It's not the net, minus taxes, employees, salaries, marketing, rent, and so on and so on. Just how much the product cost compared to how much they make. That's the gross. So they make 20 and they get a gross of 15 billion. So we're gonna take our calculator right here. We're gonna do 15,107. We're gonna divide by 2286. Mr. Warren Buffett would like to see a couple of things. If it is a regular company, meaning UPS, Nike, Walmart, stuff that sells items, he would like to see, like physical items, he would like to see 40% gross. That's a lot. If it's a company, a software company, the average is about 70 to 80%, 70, 80%. So he would like to see that for the gross. So let's click enter. And we got ourselves 75% gross. That's that's the same for most gross. The key is the net. The key is how much they keep, because you can see a lot of software companies, they generate I don't know, 80% gross and negative net, which is insane. I don't know how to manage your money, or you're growing and expanding and spending so much money on marketing, or maybe a fancy office. Whatever the case, he would like to see the next item, which is a net, the most important number in my opinion. We're gonna go here, diluted net income available for common stockholders. You got this number 3557, and you divide it by, again, the total revenue 2286. And Mr. Buffett would like to see 20% net and up. And he says in the letters, which you can read in all of the shareholder letters, not all of them, but some of them, he says, if a company makes 20% net, they can scale and they can grow, and basically it's a fantastic company. What does it mean, 20% net? Means that the company invests $1 and they know for a fact that the $1.20 will come back. And if a $1.20 comes back and above, after they invested $1, then that company can grow, expand, and at the end of the day, add more value to the shareholders, which we are, and that's the point. So let's click enter. 17.5% net. That's pretty awesome. Software companies, guys, are negative. 17.5, that's almost 20%. That's pretty awesome. That's why he bought CRM, at least for this income statement. That's what we're looking for. Again, that's all you need. You need 40% gross and around 80% in a software company and 20% net. That's what Mr. Buffett is looking for. If it's good enough for him, it's good enough for me, and it should be good enough for you. Comment below if you agree that Mr. Warren Buffett is the GOAT of investments. Yeah, greatest of all times investment wise. Let's move on to the next one. In the balance sheet, I'm looking for a couple of things. First of all, again, look at the first line, total assets, and see that it's growing. That's important. See that it's growing. So it went up from 17 billion, 21 billion, 30 billion, and 55. It's up. Went up 40 billion in here, 9 billion in here, and 25 billion. It's not up. It's up significantly. That's pretty good. That's what you want to see. You want to see the assets are growing, and you want to see liabilities, not too much, and then you're going to see the ratio. So for liabilities, they had 10 billion, 11, they only added 1 billion, then 15, they added 4 billion, and that's what you want to see. Look at this. They went from 11 billion to 15 billion liabilities, extra 4, but they made extra 9 billion in assets. And in here, that's a beautiful thing. From 2019 to 2020, they went from liabilities of 15 billion to 21 billion, added 6 billion liabilities, but they went from 30 billion to 55 billion total assets, and that's only until this date, January 31st. It doesn't include Slack. This is very important. It doesn't include the assets of Slack. So that means that their assets, once you see an updated, probably this January, I assume a month from now, you will see this asset grows a lot higher, which is, maybe it's a good time to buy. The ratio that we are looking for is this one. You're going to click total liabilities. Current liabilities is all the stuff that are getting paid every month. I'm looking for non-current liabilities, and especially this one, long-term debt. Long-term debt, 5 billion. What am I looking for in this one? I'm looking for a debt ratio, long-term debt, that can be paid in 4 years or less. If a company can pay their long-term debt in 4 years or less, they're pretty good. That's pretty awesome company. Let's see. We're gonna get our calculator. I got the number 5,118 billion long-term debt, and I'm dividing that in here. Again, going back to the income statement, that's where we are. This is a very important number, diluted net income. The net, the 20% net, the 17.5% net that they got, you divide that by the net income, which is 3,557, and you would like to see a number that is 4 and below. If the number is 4 years and below, the company can pay their long-term debt in 4 years and under, which is amazing ratio. Anything over 4 years, it is what it is. Buffett is looking for 4 years and under. And that means that basically if nothing happens and they don't grow, which clearly they do, they just bought Slack. If they don't grow, they can pay their long-term debt today in 4 years or less, just by the net income that they're. That's why it's very important to buy a stock that is profitable, and ideally 20% net profitable and not negative net income, which is most of the hottest and latest IPOs. If you read the financials and not just listen to TikTok and people saying, TikTok and YouTube people saying, go buy Palantir, Neo, and all that stuff. Just a side note. So let's click enter and see a number of 4 and below. That's a great number. Warren Buffett, he bought CRM. There's a reason why he bought CRM. It's gonna take them less than 18 months to pay all their long-term debt. Go check Bank of America. I did a couple of days ago. It's gonna take them like 13 years to pay off their long-term debt. That's not a good number. That's good. 18 months, a year and a half, it's going to take them to pay their long-term debt. That's another check mark in Mr. Warren Buffett to-do list, and move to the next item. And sure, you can read all the other stuff. You go back to balance sheet, read all the stuff in here, tangible stock, tangible investment capital, net debt, issue shares, whatever that you want to do. Feel free to do so. No one is stopping you. But this is the ratio that Mr. Buffett is looking for. That's it. I'm sure he reads all the other stuff before he buys the company. He doesn't just buy, call options for the $500, $1,000. He buys the company itself, which is crazy. Or a couple of billions, whatever the case. But that's a ratio that he's looking for. If this ratio, the 4 years or under, is not good, he's probably gonna pass on the company, unless it's Bank of America. Go watch Bank of America. I'll explain. You will understand, at least in my opinion, why he bought. Moving on to cash flow. I'm in the cash flow statement right here, and I'm looking for a couple of things. Number one, the most important item in this cash flow is this one: operating cash flow. The money that they're making from their core products, meaning CRM. That's I used CRM when I worked, I don't know, like 12 years ago. No, not for around 2012, like 8 years ago. The company that I worked for used CRM. Now it's a brand name, and every other company in the world is using CRM. So the operating cash flow, meaning the money they're making from their product, not from refinancing loans, issuing more debt. No, just from the operation of the business, which is that's where you want to see the money comes from the business itself. So again, look at the glance. We got 2 billion in here. A year later, 2.1. Now we got 2.7. Now we got 3.3, so that's another 700 million. Before that they grew by 600 million, and now it's 4.3, so then they grew another 100 million. And year to date, the last 12 months, 4.2, 4.3, same thing. There's Corona, so they stay the same. They didn't grow so much. Maybe they just focus on purchasing Slack. I don't know. And there's also Corona, so let's be real. But that's good. This is good. Stability, a growing company. You want to see this as a plus, and we got a plus number. That's a good check mark. Next, we want to see a negative number in this one, investing cash flow. And we got ourselves a negative number, minus 5 billion. Investment cash flow is the money that goes as investment in the business to expand the business, not by debt or shareholders or dividend, just expanding. Buying more companies, buying Slack, I don't know, making more IT people working, hiring more, I don't know, management, marketing, expanding to other companies, whatever the case, investing back in the business so the business can grow. This is not a mature company. I think they want to try to fight with Microsoft. That's probably from everything that I've read in the last couple of week or two. And maybe with Slack they will be able to compete with Microsoft down the line. I don't know. I don't follow CRM, but if Mr. Warren Buffett bought a software company, he knows a lot more than me. But you want to see a negative number, and we do, and that's a good sign. Next item on our list is this one, finance cash flow. So we got finance cash flow, a positive number of 1 billion, 1.1. Ideally, it should be a negative. You want to see positive, negative, negative. That's like super ideal. Now, when I dug a little deeper to see why is it still positive and not a negative, you can do the same. You click finance cash flow, see what happened. It's not rocket science. It is not. And you see this number right here, proceeds from stock options. Proceeds from stock options exercised. 1.4 billion. What does that mean? Probably some workers that, I don't know, got some CRM options maybe 10 years ago, whatever the case, sold some options, exercised the options in some total of 1.4 billion. That's how we got to this number. If there was no 1.4 billion, we would see a negative number of this one of minus 250 million. That's what we want to see. But maybe it's probably a good company to work for if the workers can exercise $1.4 billion worth of CRM stock and become wealthy just by working for the company. Something to think about. I don't know. I don't work for them. But that's basically. So I'm not too worried about this number. Should have been a negative, and some workers probably just exercise some options. You want to see a positive, negative, negative. It's that simple. Let's move on to the other ratio that Mr. Warren Buffett is looking for, which is this one, capital expenditure. Capital expenditure, you take this number 697 million, and you divide it by the net income. Again, go back to income statement, go all the way down here to the diluted net income, 3557. Okay, Basically, once I click enter, you're gonna find a ratio that says that talks about the management. That's the Buffett is a very, very smart person. He says that if this ratio is 25% and below, there is the management of the company is doing an exceptional work by spending their excess cash flow super wisely, investing for the shareholder wealth instead of just, I don't know, doing whatever that they. If the number is between 25 and 50, it's an average management. An average management, you will get average result and average returns. If it's over 50, you know, I don't have to tell you what that means. So stay below 25 if you find company. If all the check marks are good, like the 40% growth, 20% net, less than 4 years of long-term debt, and less than 25% that they can pay their basically they spend their cash flow 25% or less. Positive operation, positive, negative investment, negative finance cash flow. You got yourself a deal, and then you need to find the fair value. So you need to do all of this instead of just going to Wall Street bets and in Reddit and buy some YOLO Tesla calls. I can't argue with that because that made the insane amount of money this year. But this year is not a normal year, and eventually you will get burned. So with that being said, and comment below if you made money with Wall Street bets, Neo, Tesla, Palantir, YOLO calls. Let's click enter, and I would like to see a number of 25% and under. Okay, 19%. 19.5%, meaning that the management of Salesforce CRM is spending their excess cash flow magnificently, amazingly, efficiently. That's the word that he uses. Efficiently. Every excess money that they have, they spend it to expand the wealth. Their number one goal, according to him, number one goal is, with this number 25% and less, is to expand the wealth of the shareholders, and that's like the number one priority. And that's what you want to see. We got all those check mark in the check mark, which is a great thing. Now we got to find the fair value of CRM stock. So it's not enough that all those stuff checks out. Now we need to see the price that where it should trade today, and the price that Mr. Warren Buffett will be a buyer, even though he already bought, I don't know when, probably a couple of months ago. So I'm back in the Excel, how to value a stock like Mr. Warren Buffett. Let me remind you what we got. We got earning per share 385, growth 14.04% for the next 5 years. And I went in Google and I found the corporate bond yield 227. Stock price today is 218. And before I hit enter and find the fair value of CRM Salesforce and the price that Buffett will be a buyer, which have a margin of safety of 33%, it's a good time to introduce myself. My name is Ziv, also known as Finance After 40. And while I am new to YouTube, just started like 2 months ago, I have TikTok for the same name, Finance After 40. With about like 18,000 community members that following me, as well as about 150 members following me on Patreon, which you can get this Excel for yourself, $10 a month. We do crypto, we do selling options for income. I try to focus on selling them instead of YOLO calls. That's not how you're gonna generate wealth long term. Sell the options to make more money. And of course, if I bring you value, don't forget to subscribe, hit the hit the like button and the bell notification button as well. And leave a comment below which stocks would you like me to do next. This Salesforce was a request of one of the comments from one of the past videos that I've made. So without further ado, guys, I'm gonna click enter. I'm gonna find the fair value of Salesforce and the price that I will be a buyer. So dum. Okay, we got ourselves something interesting. Stock fair value 273, which is about 25% from here. Exactly the price that they were before they bought Slack like 2 weeks ago. They were fairly valued, and then they went down 20%. And the price that Mr. Buffett will be a buyer is 183, which is I think like 15% from here as well. Will it go another 10-15%? If the Nasdaq goes down ever, then sure. If it doesn't, not a financial advice, of course, but if you are interested in Salesforce CRM, maybe it's a good price to get in and start building a dollar cost average position. You know, it's worth 270. You got yourself a buffer. Everything that they lost, they should get back, and most likely because all those financials we saw they were updated last time. They were updated was January 31st, 2020. So without the slack just happened like 2 weeks ago. I don't know if it's gonna reflect in next month, like January 21, and if it does, this number will probably be a lot higher because they will add all the value of slack. And if it does, I will probably need to do an update video, and maybe the fair value would be, I don't know, $400 or $500. I don't know. I know that as of today it's worth 273, and Buffett is waiting for it to go a little more down just to have a safety of margin for a price of 183. We're currently at 218. Do with this information as you will, and if I bring you guys any value, smash the like button, subscribe, like all that good stuff, and I will see you in the next video. Thank you guys very much. Yeah.